With me in the studio is Jonathan Davis, an economist and wealth manager. Jonathan Davis, you haven't seen that home, but is it sensible to buy a new build home for £260,000 nowadays?
In general terms, Paul, I think we're still in a bubble in some parts of the country. The crash, which started in 2007, is ongoing. I think to invest or to trade up or to buy for the first time new property at prevailing prices would be financially imprudent. People need to realise that for 30 or 40 years we had a rise in prices because we had falling inflation, falling interest rates from 20% to 0.5%. We had a rise in lending until a crescendo of easy lending in 2005, 6 and 7. We had a rise in the public sector. And where are we now? Interest rates cannot fall, lending will not rise because the banks are technically insolvent, the public sector is being cut, we have many people in negative equity, households are up to here in debt, asking prices are 30 to 40% above actual transaction prices, and I can go on. That's the reason why the house price crash continues.
OK, you say banks are insolvent, and of course I'm sure the banks would disagree with that, but I know that's your view, and of course there was that test which showed our big four banks were OK. We heard earlier from Mark Stevens that he said we were fueling the next boom. You're saying we're in a bust and it's going to go on for some time. Where are house prices going to end up?
I cannot see, given what I've just said there, I cannot see how it's possible that house prices at the end of the decade could be any higher than they are today. Look at places like Northern Ireland. Prices are 50% below where they were. In London, sure, and South East, prices went down 25%. They came back again, but they're on the way down again. 7 out of 8 surveys says it.
OK. Ray Bolger's also here. He's Technical Director of mortgage brokers John Charcoal. Ray Bolger, do you accept what Jonathan says, that house prices are falling and will continue falling a long way?
No, the facts don't just bear that out. I mean,
Jonathan's facts did.
Well, he must be looking at different facts to the ones I look at. I mean, Northern Ireland, for example, did see house prices rise 50% back in 2007. And there was a subsequent fall, but that was after a big rise. Now, I'm looking at the nationwide regional figures, and they split the regions of the UK into 13 regions. What they're showing over the last year is that all but 4 regions are actually showing small rises. The maximum is 2.6% in London, and the smallest fall over the last year is 0.9. So although London is clearly outperforming the rest of the country, it's not as significant as some people are suggesting.
But if you look at land registry figures, which are actual sales, prices are falling almost everywhere. I mean, there are some little bits of London where they're rising, but they're drifting down, and that's despite the fact that I mentioned at the start of the programme that we don't have enough homes which should be pushing them up. So the banks aren't lending as they should, are they?
Absolutely right that the lack of mortgage lending has been a key factor behind prices falling. We saw prices falling for about 17 months, from October 2007 until Feb 2009. And since then, there's been a bit of recovery. The last few months, prices have actually been recovering slightly. If you look at the first 6 months of this year, the nationwide index, taking the real figures, is plus 3.7.
Let me bring Jonathan, because he's very anxious to talk.
Transaction numbers, as Ray very well knows, because he's a mortgage broker.
You mean the number of sales that are actually going through?
Absolutely, are about 40% of the numbers in the high point of 2006 and 2007. Asking prices, particularly in London and the South East, are 30 to 40% above actual transaction prices. In terms of lending, we can debate till the cows come home about the banks, whether they're insolvent or not. They're not lending because they need to build their capital reserves. They will not lend for years because of lots and lots of reasons. When you consider the amount of debt that's already in society, and you consider, your listeners need to ask themselves this question: why are house prices not rising when in fact they're falling, and yet we have the lowest interest rates on record?
And big demand, and you're saying that's
exactly
because the banks are not lending.
That's the primary reason, and it will not change for years.
Let me ask Ray.
Certainly the lack of mortgage finance is undoubtedly a factor, as is consumer confidence being weak, people worried about losing their jobs. But mortgage availability is not as bad now as it was a year ago. We have, over the last few months, seen more lenders coming into the market with 85% loan-to-value, 90 and even 95% deals. Just in the last couple of weeks, the Saffron Building Society and the Newbury Building Society have come out with some interesting 95% deals.
But these are small building societies. They're not going to lend to thousands of people, are they?
No, they're not, but it's a trend. And the reason lenders are going into that area is because some lenders have got more money to lend, and they are looking to push the boat out a bit.
Right, so you're saying that the mortgages are there, but only for a limited number of people who can get them before they've sold out.
Well, that's certainly true, but even the big boys are tending to get more competitive. And if lenders want to increase their lending, and several are looking to do that this year, they've either got to become more competitive in the area that they would most prefer to lend, low loan-to-values, or they've got to go into the rest of the market.
So, Jonathan Davis, things may not be great, but they're nothing like you say, are they? We're not going to see a huge crash. Lenders are lending. You can buy homes. Although transactions are down, people are still buying homes.
I find it remarkable that on the BBC we can hear this question, we're not going to see a huge crash. You clearly don't have listeners in Northern Ireland.
It's a question, Jonathan.
Or the northeast of England or the West Midlands, where the crash started in 2007 and it is ongoing. And even in London and southeast, which clearly this programme is London-centric, prices are 5 or 10% below where they were. Add on inflation and you're looking at 10 to 20% below where they were. And transactions are not happening because the asking prices are too high. Estate agents are complaining that they can't sell. It's not going to change. Prices are falling. They will continue falling for years.
Jonathan Davis, thanks, and thanks to Ray Bolger of John Charcoal. I'm sorry we have to end that debate there.